Always good to hear what some of the Fed officials have to say. Interesting, though, that Mester is saying that 3 cuts are now unlikely at this point. Bostic saying that it is likely that rates end up at a higher rate than where they have been in the last decade. A neutral rate probably more similar to where we were in the 90s than where we were in the last decade. What does that mean for the trajectory of equities?
Absolutely. And if you remember, as we enter 2024, we had this idea that inflation is going to go down very quickly, and then obviously, it turns out to be kind of unlikely. Inflation turns out to be a sticky one, and then that's why we saw some pushback from Fed on when and how many rate cuts we're going to have this year. And last week, CPI was a testament to how market is nervous about inflation. That's why a small beat in CPI took market to all-time highs.
Do you think that reaction was warranted last week? Because it was a minor beat and only on an annualized basis, and yet all of the market participants cheered it on. And it feels like the Fed now, some Fed officials have been pushing back against that optimism.
Yeah, because, like I said, market waiting for CPI to turn around, back down, and we saw that in last week. Is the jump is warrant? The direction is right, I believe, but maybe the speed, as usual, is not justified, and this is what happened in the equity market, and that's why going forward in the next couple of weeks, with the Fed official pushing back a little bit on market, that could create a rebalancing of risk again.
What do you think is going to drive this next leg higher in equity performance? Because valuations are sitting close to the rich side.
Absolutely. So the main drivers for equity has been since COVID, Fed and monetary policy, corporate earnings, and obviously the AI frenzy, and we believe all of them continue to be intact. Corporate earnings this quarter was good, and we continue to post a record profit for the S&P 500. Monetary policy, the rate is behind us, so we are looking at cuts instead of anything else. So that's good. That's supportive for market. And, we continue to hear from tech company how they're going to invest in AI and how much they're going to spend on the cloud business and so on and so forth. So all this, I think it's a right mix for equity, and that's good for both markets.
What do you think is the biggest risk for equities here? Is it higher inflation or is it slower growth?
I think slower growth. I think inflation could, maybe consolidate around these levels and try to turn back down. I think we might have a surprise, and this is a tail risk, obviously, in terms of growth. I think a U.S. election and stability in the U.S. election might be a tail risk, and obviously here in the region, we have a lot of, risk that's need to be watched very carefully.
Yeah, the geopolitical risk.
Yeah, absolutely.
So before we talk about geopolitical risk, I just want to turn to the big event this week for stock investors, and that's Nvidia earnings, the last of the Magnificent Seven to report. It's been the darling of the Magnificent Seven of the S&P, poised to actually become the largest company by market cap in the U.S. Do you think there's too much hype in the stock?
Absolutely. It's been a crazy ride in Nvidia. To your point, tomorrow's earnings not going to change the picture. Whether they're going to miss or beat, at the end of the day, it's just a sell-side estimates. The picture is still positive for Nvidia. And similar to what we saw a couple months ago with Apple, the stock was disappointing, had a decent drop, and then the stock back up. And this has created an opportunity for investors. So if, for example, Nvidia missed on that day or investor took it negatively, that could be a...
Buy the dip.
Yes, absolutely.
What sectors are you involved in right now?
So we like growth across sectors. So you can find it across tech, obviously, although tech start to be quite expensive. And when we say tech, you have the software, cybersecurity, a lot of companies that's under the radar. You can find decent valuation with decent growth profile. Restaurants, healthcare, so a lot of sectors, you have to cherry pick stocks within those sectors.
Okay. Let me go back to what you said earlier about some of the political risks. U.S. elections coming up, geopolitical risks, obviously very escalated right now in the region. How do you hedge for that? How are you hedging against the possibility of a bigger blow up in these risks?
Personally, in FAB or in global markets, we are long short, so we do take some short bets on the market. So this is how we hedge. We hedge through options. We always take into consideration the tail risk, although the probability of the risk goes up and down, depends on how the situation is. So this is as far as us, but you can always hedge with, the traditional hedge assets, for example, gold, and that's why you continue to see
gold is at an all-time high.
Yeah, because a lot of people are using it as a hedge against what could happen in the next couple of months.
Yeah, makes sense. So people are bullish risk, but at the same time cognizant of risk, which is why the gold safe haven is doing quite well.
Yeah.